Hi, I'm Jim Juback, and welcome to my YouTube video for Wednesday, September 14th. Behind my shoulder, you can see my coffee plant, which is my personal latest step toward taking care of business during global warming. I think coffee is going to become a commodity that is very stressed as temperatures rise, so I'm going to grow my own. I also have a lemon tree growing in my bedroom, so I'm ready. Bring it on. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you'll get notification of when the next one's going up. We do about 3 a week, not always on the same day. So if you sign up, you get a little notice of when it is. If you want more of my stuff, you can go to my free site. That's jubackpicks.com. That's 3 portfolios. Or you can go to my paid site, jubackam.com. That's 6 portfolios, including some options and some ETFs and some shorting appropriate for this market. So you find links to that down below. Okay, yesterday, the 13th, we got inflation numbers, CPI inflation numbers, and they were disappointing. And the market, well, didn't like it. So the topic for today is the Fed's real inflation problem. But let's look at the charts about what happened yesterday. Okay, this is the S&P for yesterday, and you notice that we had a fairly big drop. That at the time I was filming this, we're down about a little over 3% on the S&P. The Nasdaq was even in worse trouble. Let me see if I can get that to behave. Here it comes, and that was down almost 4%. Now, I think in the very, very short term, because we've got the Fed meeting coming up this afternoon, the question is how long does it take the market to convince itself that this is actually a good inflation number as opposed to a bad inflation number, because the rate, while it didn't come down as much as people wanted, did come down in August. So it looks like, again, that June is going to be our peak. So we're seeing 2 months down. So how long does it take the market to convince itself that we're headed in the right direction on inflation? I think when we get the Fed move to raise rates at its September meeting, everything is moving in the right direction. I think we're going to get the next leg in this bear market rally before we get disappointment. But the real problem in the CPI number that came in yesterday is that there are things going wrong in the inflation number that the Fed really doesn't have a whole lot of power to fix. So that, for example, the reason the market was so disappointed is that inflation, after being 9.1% annualized rate, 9.1% in June, went down to 8.5% in July. The expectation was they were going down to 8.1% for August. Instead, we only went down to 8.3%. Again, the trend is in the right direction, but not quite as fast as people wanted. There are 2 problems. One is that the core rate is still going up. That's without food and energy prices. So it went up to 6.3% for August, annualized rate. And that was worse than the 6.1% increase. It was 5.9% in July. So both of these are increases in the year-over-year rate. Supposed to go up, according to economists, 6.1, went up 6.3. That's a problem. And the other problem is that if you look at what components in the CPI number were most out of control, if you will, the biggest one is shelter. And this is a kind of statistical construct which calculates rental rates based on housing price equivalents and all that. And it went up by 0.7% month to month in August. And that's the biggest increase since January. Not January 2022 or January of 2021. The biggest increase since January of 1991. So fast-growing rental rate increase. And as economists have said, after looking at this going, hey, we haven't seen the really big turnover in leases that happens in September every year. So we're still going to be seeing big increases coming through. And the other thing that's a problem here is that the Fed really doesn't have a whole lot of control over this. It can hammer housing the housing market by raising interest rates, which it's doing, slowing growth. But that doesn't really do much to help the rental market. Because if you have fewer houses coming on the market and they're becoming more expensive, that means you're actually pushing more people into the rental market, which means that rental price increases are going to be around for a while. And that's a problem since this is about 40% of the CPI. Trend is in the right direction. Longer term, I think there's a continued problem in inflation. And so if you look at this and go, okay, so market right now is in kind of shock and waiting for the Fed to meet on the 21st. And, so it'll take a little while for the market to convince itself that things are going to get better. But then somewhere further down the road, the market is going to wake up to the fact that inflation is not coming down as fast as it can, as they hoped, because there are real structural problems in the inflation rate that the Fed doesn't have much control over. Okay, that's my video for today. If you like it, give us a like. Please subscribe to my YouTube channel. If you want more of my stuff, go to jubagpicks.com. That's my free site. Or more, 6 more follows instead of 3. That's jubagam.com. That's my paid site. Thanks very much for watching. See you next week.